Hello, this is Danny Holder with Capital Retirement Planning and Capital 401k Advisory. I wanted to give you a market update today, which is Friday, July 26th, and we're seeing some mixed signals in the market thus far. The market adage of selling in May and going away probably wouldn't serve people this year to any great extent because the market has been doing relatively okay. It hasn't really been going anywhere, but we did have a downturn in the middle of May up until June 24th. We saw about a 5% decline in the market up until the last of June, and then the market started going back up again. The mixed signals that I was telling you about starts with the New York Stock Exchange bullish percent, and what we're looking at is the New York Stock Exchange bullish percent, which is a measure of participation in the market. And when we see a column of X's in this index, it means that the participation of the market, that stocks are participating in an upward movement. And when we see columns of O's, it means that stocks are falling away from buy signals, actually going to sell signals, and participation in the market declining over time. So we can get a different reading from this index than we can by looking, for example, at the S&P 500. This chart is telling us that currently we're in a column of X's, which means that participation in the market is increasing. However, we're at a very high level of participation, and that being about 70% of the stocks on the New York Stock Exchange being on a buy signal. Twice this year already, the market has changed to a column of O's on 2 occasions, and historically speaking, when the market declines from a level above 70% for a second time, it's usually quite a downfall after that. That didn't play out the last time that it occurred. We'll certainly go to a column of O's again in the future, and when we do, it may be the time that we see a larger decline in the market. So we'll want to pay close attention to this chart and take appropriate action when it does change. Another indicator that I'd like for you to see today, with this indicator we're able to see every stock on the S&P 500 charted in a way that gives us representation of a bell curve. In the center of the bell curve we have the median line, and we have 1 standard deviation in this area, 2 standard deviations here, and 3 standard deviations. Standard deviations, an easier, more understandable term for them would be zones. Zones 1, 2, and 3 to the right of the median would be indicating an overbought market, meaning that so much money has come into the market so fast that it's caused the market to be, or considered to be, overbought. 3 zones to the left would be oversold by 100% with this outer line. And so you can see very visually, very graphically, that we are in somewhat of an overbought market. Not troubling to any degree, but simply showing that the market is moving forward. Stocks that you see colored in green indicate that the momentum of that stock is positive, and stocks that are shaded in red means their momentum is negative. So you're seeing quite a bit of red in the chart at this time. Now let's go back a week, and we'll see that the momentum last week was positive, much more positive. The overbought nature of the market last week was about the same as it is now, but the momentum has begun to shift in the last week, so we're keeping a close eye on that as well. Another indicator that has caught my eye recently is the 1040 MUO. This indicator measures mutual funds, and the percentage of mutual funds whose 10-week moving average is above or below their 40-week moving average. We're seeing that we're currently in a column of O's on this chart, and by this chart going to a column of O's for now only the 12th time since 1997, it's something that really is catching my eye, because this chart doesn't change to O's very often. Changing to O's means that the 10-week average for all mutual funds, this would be mutual funds not only in the United States but worldwide, the 10-week average is now beginning to fall below the 40-week average. So we had, this 3 would indicate March, 94% of all mutual funds last March saw their 10-week average above their 40-week average. And what we have now is a situation that only 86% now of all mutual funds have their 10-week average above their 40-week average. So we're seeing that percentage decline. What is most troubling about this chart is the number of times that it has gone to O's, but notice the number of times that it basically goes from coast to coast. It goes from very high levels to very low levels. So again, this is something we'll want to keep our eye on. It's a point of caution, it's not a point of action, but we take this chart along with the others to form an opinion of what the market is doing and work to protect assets and keep them from declining, hopefully in the early stages of a market decline. I hope this information has been helpful and give you an update of what's happening in the market at this time. Thank you very much.